This is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Insight. Well, the numbers are just out, and I want to share them with you, and they're a direct result of why there's a retirement crisis in this country. And it's because of unpredictable, unfavorable, and unsupported returns to enable our money to help us sustain our lifestyle. And it's called the DALBAR Institute. And they are a research firm that every typically April, May, release the last 30 years of averages of stock market investor returns. And this isn't just limited to mom and pop. These are major institutions, retail brokerages, money managers, etc. And so here's the statistics. The asset allocation, which the asset allocation would mean you're diversified amongst different asset classes. Many of you watching this actually pay somebody to do this. Or you may be trying to manage or balance that on your own. The average 30-year return has been 1.65%, which it trails inflation by more than double. And that's before fees and taxes. Equity mutual funds, which we find predictably baby boomers have just exploded the growth of equity mutual funds, which there's so many better alternatives than mutual funds, I can assure you, which is something I'm happy to teach. Have been 3.66%. So if you just rolled the dice, stayed in the market the last 30 years, which you averaged less than 4%, which is 2/3 less than what just tracking the S&P 500 using indexing, which is what our clients typically use for part of their retirement income protection planning, got you a really low return, which is obviously not even keeping pace with real world inflation, which includes food and energy, unlike our government that excludes those two items on the family balance sheet. And then income allocation. So basically rolling the dice in bonds for the last 30 years, which many people aren't aware that bonds are actually more volatile than stocks in many, if not most cases, has averaged 0.59%, less than roughly barely half of 1%, which is why there's a major crisis and why the number one concern I talk about in Hidden Wealth Radio this weekend are folks worried about running out of money or having to reduce their lifestyle. And some of you have been very open with me about that from the emails you've sent, especially during my educational webinars, as well as what you've shared for those that I've had the privilege of speaking to. Well, folks, I want to teach you how you can have a protected retirement income plan, and I'll be teaching it this coming Tuesday. In fact, it's a retirement income plan protection webinar, which means there's no cost or obligation. You can call and register, or you can log on and register by registering at retirementprotected.com. And again, that's just going to retirementprotected.com, picking, depending on your time zone, there's spaces still available, as I understand, for all three different times that we offer. But make sure you get the time that fits best for you and your time zone, work schedule if you're still working, or if you're retired around your appointments at retirementprotected.com, retirementprotected.com. Now, some of you just prefer to call. And if you want to call, it's 855-668-2928. That's 855-668-2928. And what I want to teach you is how you can have upside without downside. How one of the clients, like many of you, had attended our webinar last week and said, in fact, we spoke with them, and they had no idea that they could get out of what they're in, do it tax-free, and have unlimited upside without downside, because what they're in now has averaged about 3%, as opposed to where we had back tested this for them, they'd averaged 9.28, taking no downside risk. Folks, it's your retirement. You've worked hard for it. Let us show you how you can use it in a way to protect you so you can protect your lifestyle and avoid the coming potential crash. I hope not a crash, but at least a correction that many are predicting. Here's to your hidden wealth.